welcome to Trading the Close on this Wednesday. I'm Toni Valliere with Verified Investing. And here's what's making headlines on this Wednesday afternoon. Tesla will be asking shareholders to reapprove CEO Elon Musk's $56 billion pay package months after a Delaware court found it flawed and voided it. The company is also looking to reincorporate in Texas as a result of the court decision. Comcast is launching a prepaid and month-to-month internet and phone program called Now. The plans range between $20 a month to $45 a month. Cheddar Bay biscuits could be a thing of the past soon as seafood restaurant chain Red Lobster may be headed for bankruptcy. And after days of declines, Trump media shares soar 20%. Donald Trump owns nearly 60% of the company's shares. The Bitcoin halving is expected to happen this week, Friday to be exact. The event happens every 4 years and results in rewards for Bitcoin miners to be cut in half. The goal is to reduce the pace at which new Bitcoin enter the market. Now, there will only ever be 21 million Bitcoin, and the halving serves to create more Bitcoin scarcity. All right, let's get a check of where things stand with the markets at this time. The Dow right now down 72 points, 0.19%. We're seeing the NASDAQ down as well, 167 points, 1.05%. We're seeing the S&P 500 down as well, 28 points, 0.57%. We've got oil down. We've got gold down. We've got Bitcoin down, almost $2,700 at this time. Let's bring in Chief Market Strategist Gareth Soloway with a recap of the day's trading. It is still a roller coaster ride. It's a lot of green yesterday. We're seeing a lot of red today.
A lot of red today, yeah. And today was another day where we opened higher and the markets just saw selling, right? So if we look at the S&P 500 here, we opened higher here with a gap higher, and then you could just see this first half of the day was just straight down. Then we kind of got into that. Interestingly enough, we got very close to the 5,000 even number on the S&P 500. And we know even numbers historically, there's a psychological basis to them. So there's this subconscious to try to hold that 5,000. Don't give it up, because once you give it up and you go to the fours, people worry it's going to get worse, right?
Okay.
So I think that's what's going on here is you're just kind of starting to bounce here in this lower range on the S&P 500. But there's no doubt that it's a combination of geopolitical fears, it's earnings fears. We're coming into earnings season. We're starting to get some earnings that honestly are a little concerning to me. And we'll talk about like ASML, JB Hunt, a couple of these in just a little bit. But just a couple things to go over here. If we flip over to the SPY, you can just see again, it's almost like a waterfall. Like it's like a roller coaster. It goes up and then, whew, like you just go down that roller coaster. I do have a technical support that I'm watching for tomorrow on the S&P or the spiders. It's this gap fill right here. We got pretty close. It's right around 497.5. So this should just be a small little area right here. And if we do hit it tomorrow, it wouldn't shock me to see a bounce. I'll be ready for it. It's also the 0.236 fib level. So it lines perfectly up with that gap fill level. So it should be some sort of support there. Again, do I think we're going back to new all-time highs? I don't think so. I think at this point, the genie's out of the bottle. We've broken technically a lot of levels, and also we're starting to see the Fed saying hawkish things just nonstop. Inflation's going up, worries out of the Middle East. There's just so many things now that are kind of burdening the investing public that I think it's kind of bounces or selling opportunities now.
Even if there's a bounce, is it short-lived? Is that what you're expecting?
That's exactly what I'm expecting. And really, if you look past, history, and again, this is what TA is. It's looking at past situations where you get these type of patterns. And as it comes to a point, we know it breaks. And usually when it breaks, it's not just like, oh, and then we go back to new all-time highs. It's usually you go down and you see the drop, then the bounce, and then the next leg down, the bounce, and the next leg down. So I still think we're going lower. I'm actually starting to eye the 4,600 level on the S&P as a year-end target, which is still about 10% away from where we currently sit. And I think that's a reasonable target of where the S&P could go before this is all done.
What's up with opening higher and then plummeting throughout the day? Because that's been a pattern.
Yeah, and I have some speculation on this, is that in the overnight, the volume on the ES futures, the S&P futures, is so thin that you can manipulate the markets very easily. Like if you're an institution that has billions of dollars, you can use a very minute amount of that to get the markets to open higher. When you get the markets to open higher, you're going to coax in retail investors. Oh, the markets are up. We sold for multiple days. Buy the dip works every time we go back to new all-time highs. That's the mentality. And so you get the markets up, and then the small investor comes in, and the institutions are just unloading into those smaller investors. And we've seen this so many days.
Money, right?
I mean, again, if you look at, yeah, exactly. It's basically exit. It's coaxing in exit liquidity, which is a real thing. And if we look at this chart, right, if we zoom in, I mean, look at some of these gap ups like here, and then look at that sell-off. And then, you know, you had a gap here, and we inched up and opened here, and we sold off. There's just so many opportunities where the market's opened higher since we broke, and every one of them, especially lately, I mean, red, 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 and red, it's just constant selling to the downside. So, again, we will get bounces, of course, but investors just need to be a little bit more careful here.
Yeah, that's why you don't buy into it. You've really got to study the patterns and learn.
Yeah, it's for me, just to buy the dip with no reason behind it isn't a reason to trade. It has to be fundamental and technical combined with multiple factors, and then maybe I have an opportunity there. But otherwise, just blindly doing it, not a good idea in my opinion.
All right, let's talk about some of the big market movers today. They include DJT, United Airlines. They had a jump on earnings, beat, and stronger than expected forecasts. I know you followed Travelers today, JB Hunt.
Yeah, so let's start with American Airlines or United Airlines here. So interestingly enough, if we look at this high here, it's basically where the stock went right up there. So you had a double top. This is resistance going into tomorrow. It doesn't mean it can't break through, but I will give it credit. Like in a down day, a pretty significant down day today, United Airlines had a great day. I mean, you don't see the stock up 17% very often historically. So strong move. You got to give it credit for that. We did scalp trade this for a short just ever so slightly. I made a whole 10 cents on the trade, which wasn't very much money. But what I did was we shorted. Let me go to the intraday and I'll walk you guys through this trading opportunity. Is like basically we had a key level on the intraday, and bear with me as I just get it to regular hours here. So right up here, there was an opportunity to short right here. And then what ended up happening is you started to go sideways. So initially 3-bar surge, there was resistance right here. I'm like, okay, this makes sense. Markets were starting to roll over. The market started to go down, and all this was doing was going sideways. Well, what kind of pattern is that? Like up like that. That's a bull flag, right?
Yeah.
So as a trader, I had to recognize that and say, listen, I would love to make 50 cents or $1 on a pullback here. The charts are telling me differently. And so what I did was I took 10 cents, small gain, but it's still a gain, and I exited, and thank goodness I did, because then we just went up the rest of the day, right? And so as a trader, this is what I always tell people is you have to be ready for the market to tell you. If you try to tell the market will smack you down hard, right? I mean, the market doesn't care. Yeah, the market doesn't care what you think. It's what it's going to do, and we have to be open to those changes. So as a trader, you have to be flexible like that. You're right.
Yeah.
You have to recognize it really within a few 10-minute candles. Otherwise, I would have been underwater and losing money the whole rest of the day if I stayed in it.
Yeah, for sure.
So nice move there. The ones I want to talk about today, we got to talk about ASML here. This is a Dutch chip component maker. And what concerned me, and I talked about this in the game plan, is that they said that basically their bookings are way down. Now, these are the guys that supply the NVIDIAs, the AMDs with parts of their chips. And one of the things they said, I mean, a lot of the common theme would be like, oh, well, it's China. Well, they said specifically it's not China. And so now all of a sudden, and this is why I think we saw NVIDIA open higher, SMCI open higher, AMD, all of these, and then they all got crushed today. In fact, if we bring up the AMD chart, I mean, this is actually getting close to a technical level. You can see I've already marked off the buy level on AMD, but AMD was down big on the day. 5.75% for a company the size of AMD is a big drop. But again, it is coming into support. But I think that this to me was a signal, and I recognized this very early, that if they're saying that, you got to wonder, is there some sort of slowdown in some of these chip makers, the AI production chips? And again, it may be nothing, but obviously per the action in the semis today, it certainly seems like other investors had the same idea. So that was something that caught my mind.
Why is there a slowdown? Is it more competition coming in, or what are you thinking?
Yeah, so probably a combination of, well, competition could technically, their components would still be needed unless they have competing players. But I think it's more like maybe there was just an overproduction of these chips, and maybe they're not selling as many as everyone anticipated. And so that could be something. And then if we flip over to the NVIDIA chart here and we just take a look at this, you can see that NVIDIA had this beautiful little area here, right? And we broke down, we retested the scene of the crime, and now we're breaking down. And I still think, at some point we're going here on NVIDIA, which is around the 730, 740 level on the charts. But yeah, really interesting that ASML earnings really caught my eye this morning. The other thing that caught my eye was JB Hunt, which is a transportation stock. This is actually the level I gave in the game plan. Look at that. Pierced it and then held it beautifully. So good little level there. But this is a transportation stock, and they basically said that they're having pricing pressures, which is inflation, and then they're also having booking issues, revenue down for their biggest segment. And so again, inflation and a potential slowing economy is stagflationary. And that does get my attention as well. So these are things that, as an investor, most investors will probably look over, but I love bringing these to the forefront for people to kind of understand that there are cracks that are emerging here. Granted, the jobs numbers, according to the headline numbers, everything's great, but we've talked about U6, which is underemployment. Full-time workers are actually declining versus part-time is kind of keeping things up. Lots of things pointing to some trouble later this year. And I think the markets are smelling it, right?
Yes,
yeah,
yes,
that's
it all
right.
builds up. Okay.
That's right.
Gold and silver. I would love to see both of those if you don't mind.
Yeah, sure. And we got to talk about oil today too, actually. Oil had a big drop. So on silver, we know it tagged that double top here, right? This high from going back all the way back to the 2020 highs here. And we ran into it, and we have sold off, and you still have a topping tail. You put in a topping tail on the chart, which is a bearish reversal signal. So the way I view it is, again, we talked about earlier how the charts are in control. Now, I like silver longer term, and I still think it's going higher, but I have to say that when you get a topping tail like this at this high, and you close at the lower end like this, that's a bearish reversal signal. And so for me, it's saying, okay, I like my long-term views on silver are still up, but I got to respect the fact that this candle is telling me that we could come back a little bit. And then that brings up the scene of the crime, right? We had a breakout here, and then the question is there. That's my zone, 26 to 25.50. If we get back there, that's where I'm buying for hopefully that next leg, which eventually breaks out above 30.
Okay.
And then gold, you mentioned, kind of the same thing. Gold's chart is very similar in that we have the same topping tail. Today, gold was down fractionally on the day, but again, until proven otherwise, that topping tail is in charge. And it doesn't matter what I think, feel, my gut, the gut, doesn't matter. That's in charge, which says downside in the short term. Now, listen,
you're bullish on gold.
Very bullish.
But eventually, it's got to have a pullback.
But this is, just short term. Just saying that, okay, short term, this is in control, a little downside, and then I'll be buying the dip again when it comes in.
Where's the support level here that you're looking at?
So in a perfect world, and I say perfect world because you just never know.
That doesn't exist.
Right,
does it?
right. But like I guess to put it in the right way is if I had my perfect scenario, where would I think that it would come back to? And that would be same thing as we had this inverse head and shoulders here, right? So you had shoulder, head, and shoulder. So the idea would be is if I had my way, it would be a pullback right to that level, and then it would make that next move up. Okay. Sometimes it doesn't pull back there. So again, there's a chance that I might start buying around 2,200 and then add maybe at 2,100 and then down here and just kind of do a dollar cost average method of getting in the position on the long side. And this way, if it goes lower, I add, but if not, I have some exposure to the upside. So again, that's one of the ways you mitigate just in case it doesn't come back to your perfect entry price, right?
Yeah. Either way, you come out hopefully on top.
Exactly. Lastly, we got to talk oil. I've been saying that oil should pull back to $82 a barrel. Today, it basically did that in one single day. We can see, again, you have the down-sloping trend line, which we broke above. I know it's hard to see. I'll zoom in a second. But then you have this channel here. So I just wanted to show everyone where that first top trend line comes from. Now, if we zoom in on it, what we can see is, again, look at that drop. That's a big drop today from $85 to $82 right into this first level. Now, it still could go a little bit lower to tag the low end of this channel here, right? So we could go maybe down to 81 or so, but that's going to be a big test for oil if it holds. And again, if things are calming down in the Middle East, maybe that's a reasoning behind it. Maybe that's why we've had such a big fall today.
Do you see it continuing or... Yeah,
so I do think, you got to respect the level, right? So the chart is the chart, so you got to expect some sort of bounce. But in my bigger picture, just like with gold and silver, even though they're short-term bearish, I'm long-term bullish. I'm actually longer-term bearish on oil. And the thesis there is just that there's so many breaks and cracks in the glass and the ice in the economy. You know, again, this is all stuff that the media doesn't really report, but it's looking at
we do.
That's right. But it's looking at the underbelly, like the U6 and the full-time versus part-time workers. So what has the government been doing? They've been hiring so many people that it's offsetting a lot of the private sector layoffs. So all of these make me think the U.S. economy is headed towards a recession probably later this year. And if the U.S., as soon as we start seeing the recession being priced in, I gotta believe oil's going to have a bigger move to the downside.
And I would love for you, lastly, to pull up Bitcoin, please. And I do want to mention that you wrote an article on our website about the yields pulling back as well. You're constantly writing articles. You got to check out the website if you have not been. Verified Investing.
So much good data analysis, right? I mean, that's the key. It's not like people's opinions. It's literally like this morning I just showed this, and I showed this yesterday as well, and this is the yields, right? And I said, all right, guys, we are now at the high end here, right? So again, and this is just the beauty of data analysis. Is just like, okay, well, if this happened these last multiple times until proven otherwise, that should happen again. And so the idea was, okay, we probably hit short-term high on yields, and then today what happens? Yields drop. And so the idea is, again, we could technically come all the way back down here, which would be around 4.3, 4.4%. Now, most people would be like, wow, isn't that great for the market? It is if it's for the right reasons, meaning lower inflation, which allows, if it's because the economy is collapsing or weakening, then it's not so good because it means less earnings potential and stuff for stocks. So it's just a matter of what the reasoning is. But either way, just on a chart basis, just looking at it without any emotion or bias, this would have said a pullback. And what did we get today? We got a pullback. So Bitcoin, quickly into Bitcoin here.
The halving is expected to happen Friday.
Yep.
And you have been, I know you're bullish, really, but
longer term.
But you do call that it will go, down and possibly even lower. And I've been seeing that happen.
And part of this is like when I have such firm negative analysis on the S&P that we were going to roll over. And just knowing how Bitcoin reacts when the stock market rolls over, it drags Bitcoin down right now. Now, eventually, I don't think that happens like 5 years, 10 years from now, but right now it does. So that's the way I'm gonna view it, and that's exactly what's happened. If you look at the top on the stock market, the top was almost identical to Bitcoin's top. And as soon as the stock market's been kind of chopping sideways, and now this bigger rollover in the last week, you see Bitcoin just going down. So it's very much tied to the risk on, risk off trade. Having said that, we did tag a very interesting level today. Look at this, and I'll go here. So you have this line here connected to this high, and look at the low today on Bitcoin right there. So this becomes my new go-to level for whether or not we break, like have a bigger move.
Yes.
If this can hold, yeah, maybe we can trade back up, maybe, again. But if this breaks, then again, I still think we have a $52,000 to $49,000 zone where we're probably headed on Bitcoin in the near term, probably next month or so, in the next month.
I mean, I know you follow the charts, so for you, the halving doesn't really matter either way, right? It doesn't seem to have an impact as far as how the charts work, do you think?
Correct. So the halving is the equivalent of like earnings per share, right? Scarcity increases, but if people are scared, they don't care if earnings increase. They're still going to sell the stock, right? And so if panic hits, and which is what's going on here, that's the dominant force in a chart. Now, over the next 10 years, the halvings have an impact, or the next 5 years, because it's a fundamental change of scarcity. But again, when it comes to fear, like we don't, when you get scared, you're not like, well, yeah, but the halving and listen. No, it's like, oh my God, I'm scared, right? You start to freak out and you react. We're humans. We have emotion and we react. And that's why, yes, the halving is important. But when fear hits, right? Yeah, exactly. Yeah, very much for a miner. Yeah. Those miners have been crushed. Speaking of which, because I mean, basically, it's going to cost them double to mine, so their costs are going to double, and yeah, that's tricky.
We'll see the impact of that.
That's right.
All right, Gareth, thank you so much.
Thank
we appreciate it. And remember, you can catch Gareth navigate the charts in real time every weekday morning before the opening bell, starting at 9 a.m. on his show. It's called The Game Plan. It's a lot of fun, and you could win prizes. It airs right here on the Verified YouTube channel. So thank you so much for watching Trading the Close on this Wednesday. We'll see you back here Thursday. Make it a great rest of the day.